It's all about anticipation. Are you anticipating what might happen next in your trading? I love parallels between sport and trading, more specifically between athletes and traders. My son is a professional college football coach, and hearing him speak and comparing his thoughts, his players' thoughts, to my thoughts are very similar. In a 2011 article in Sports Illustrated on sports medicine's new frontiers, they spoke about the importance of anticipation. In the article it said, "For the last 3 decades, sports psychologists have been assembling a picture of how elite athletes hit 95-mile-per-hour fastballs or return 150-mile-per-hour tennis serves. The intuitive explanation is that the Ryan Howards, an American baseball player, and Rafael Nadals of the world simply have faster nervous systems, quicker reflexes, which give them more time to react to the ball. But it turns out that when elite hitters from baseball and tennis to badminton to cricket are hauled into the lab, their reaction speeds are no better than those of the people chosen off the street." So what did they find? The article continued, "Because top hitters react no faster on average than the general population, the only way they can hit the ball better is to anticipate the pitch or serve where it's going long before it gets there. Pros can tell where the ball is going much more accurately, much earlier, and with much less information. For instance, top tennis players can tell from the nuances of the pre-serve movement of their opponent's body, sometimes just tiny shifts of the torso, whether a serve will be on their forehand or their backhand. Average players, in contrast, must wait to see the motion of the racket, losing valuable time." So what does that have to do with traders? Well, the best traders anticipate as well. Fundamental traders might be able to anticipate a shift in the focus of the market given the nuances of the economic data. Economic analysis is often a hopscotch of this will happen, which will lead to this, which will lead to this, etc. And that ultimately will cause the price to move higher or lower. Technical traders, in contrast, will look at the nuances of the price action in relation to the tools applied to that price to anticipate a move higher or lower. If the nuances of the market finds sellers against the 100-hour moving average, traders can lean against the moving average line with risk defined near the level and anticipate a momentum move to the downside. Like baseball players, the traders may swing and miss. Baseball players, if they hit safely 3 of 10 times, are still likely to be all-stars. Traders fail often too, but depending upon what they do with the wins will determine whether they're an all-star or not. So it's all about anticipation. If you can anticipate the market from the nuances of the fundamentals or the technicals, or both, you have a better chance to be a success, and maybe even an all-star. My name is Greg Michalowski. Good fortune with your trading.